What's up everybody, welcome to the channel. This is Sohail and today I want to show you 5 price action trading strategies that are used for day trading. In this video I'm not going to explain the basic concepts of price action trading, so if you don't know what price action trading is and you're not familiar with the key concepts and available disciplines in this trading method, I have a video on this that you can watch it first, and after that you can learn the trading strategies in this video. And if you're already familiar with the basic concepts of price action trading, stay tuned and let's get started. Alright, here we go. As you can see, we have a naked chart here. No indicators, no overlays. We only have volume bars here at the bottom of the chart, which we use it for some confirmations, and it's necessary for trading. The strategies that I'm going to explain are suitable for day trading, and some of them are also used for swing trading or mid-term trading that I will mention. And the time frames that I use are 5 minutes, 15 minutes, and 1 hour. The first strategy that I want to explain is called inside candles strategy. If you're familiar with candlestick charts in patterns like Harami and 3 inside up or 3 inside down, we have a small or short candle which is totally included in the body of the previous candle, and with further confirmations they show the possibility of reversal. Inside candles strategy is somehow similar to those patterns, but here when a candle touches a support or resistance level, ideally it's better to be a long candle. After that, we have some candles that are included in the low to high range of that long candlestick. Actually, the price starts to coil and goes to a tight consolidation, which tells us that the price refuses to go back, and it gives us the possibility that the price is going to break the support or resistance level. As you can see here on this chart, the price is in a trading range here with the support level that you see. You can clearly see that this long red candle touches the support level, and after that we have 4 candles that all of them are totally included in the low to high range of this long red candle. This shows a very tight consolidation, and it tells us that the price refuses to bounce off the support level, and it gives us high possibility that the support level is gonna break. And after that, you can see that this long red candle broke the support level with considerable increase in the volume, as you can see, which confirms it was a valid breakout. Aggressive traders who take more risk may enter a selling trade here when the price breaks the support and passes the low of this long red candle. But conservative traders wait until the breakout is confirmed and they go short when this candle is closed. Pay attention that we can have this condition also after breakouts in a form of a pullback and retest of the broken line, or just like this case when the inside candles are moving upward. As you can see, the candle that broke the resistance level is a long green candlestick, and after that we have 4 candles that are above the broken resistance line, which is acting as support level now, and these 4 candles are totally included in the long green candle, and this shows a pause and consolidation before further continuation. Gap and long wick strategy. In this strategy we have a gap. Ideally it's better to be a large gap. And after that, we have a candle with long shadows, which is naturally bullish or bearish depending on the direction of the gap. This condition is more common in the opening hours of the market, and the strategy works pretty well in those times when we have major gap up or down. As you can see here, we have price chart of Apple. The time frame is 5 minutes, and as you see, we have a large gap here, and after that we have a hammer candlestick, which is naturally bullish. If you're not familiar with candlestick patterns, I have a video that is a complete guide to candlesticks and candlestick patterns. I recommend you watch the video later because candlestick patterns are very useful in trading. Okay, getting back to our chart, as I said, we have a hammer here, which tells us that at first, after the gap, sellers pushed the price significantly, but no success for them to fill the gap, and buyers took the control and drove the price near to the level it was opened and formed a hammer candlestick, which is naturally bullish, and it tells us that there is a possibility for the advance to continue. And here we have another example of gap and long wick strategy. As you can see, we have a large gap down, and after that the price tried to go up and fill the gap, but no success, and the result is an inverted cross doji, which is naturally bearish, and it gives us the possibility that the price is going to continue declining. Pay attention that inside candles can also appear inside the bullish or bearish long wick candle after the gap, which gives even more possibility to the continuation of the move. As you can see here, in this case, after the gap, we have a long wick candle, which is bullish. And after that, just look how many inside candles we have in the low to high range of this long wick candle, which shows the price is coiling in a tight consolidation and refuses to go down and fill the gap. And this combination of long wick candle after the gap with inside candles included in the long wick candle gives us a very strong possibility that the price is going to continue advancing. False breakout strategy. Every breakout is not a valid breakout, and the price may go back below or above the broken line, which can bring us opportunity of trading if there is a trading range. As you can see on this chart, here the price breaks the resistance level and closes above this line. But if you look at the volume, you can clearly see that the volume is very low, which tells us until now the breakout was not a valid breakout. And now we have two possibilities that may happen. The first is that the price may get close to the broken line, and after testing the line, it bounces and advances in the direction of the breakout, which itself is a trading strategy that is called pullback strategy. And I'm going to explain it later in this video. And the second possibility is that the price may return to the trading range and go down to the support level. For this condition to happen, we must have a strong signal that gives us the possibility that this was a false breakout and the price is going to return to the range. As you can see, here we got a bearish engulfing pattern, and the engulfing candle is closed below the line with considerable increase in the volume, which shows that the selling interest is significantly high. And as you can see, after that the price declined to the support level of the trading range. Pullback strategy, or some traders call it retest strategy. When we have a breakout, even a valid breakout, it doesn't mean that the price advances or declines in the direction of the breakout instantly. And sometimes we have a pullback and retest of the broken level, and after that the price advances or declines in the direction of the breakout, which provides us a very low risk opportunity to enter a trade. As you can see here in this trading range, here the support level is broken and the volume also increased. As you can see, aggressive traders may enter a selling trade here when this candle is closed because the breakout is considered a valid breakout. But conservative traders who take less risk and always look for low risk trade entries, they choose to wait for a pullback. If the pullback doesn't form, they fail to catch this move. But if the pullback forms, they will have a really low risk trade if they get the signal. As you can see here, in this case, after the breakout, we have a pullback and the price tests the broken level again. Pay attention that in this pullback, we have also inside candles formation. Just look how many candles are included in the low to high range of this red candle with a long lower shadow. And this shows that the price is coiling in a tight consolidation and there is a possibility for further continuation of declining. Anyway, here we are talking about pullback strategy. So we wait for the pullback to form, and as you see, the price is not moving below the low of the red candle and it's moving to the broken level to test it. After testing the broken level, as you can see, the price starts to fall and we have long red candle that engulfs 5 previous candles, and this is a very significant signal, and also the volume relatively increased. So we can enter a selling trade here when this long red candle is closed. Confluent levels strategy. In this strategy, we look for confluent levels that give us the same signal. Confluent levels can have different forms based on the levels that we have. Here I give you an example so you understand how to identify confluent levels and how they are used for trading. As you can see, we are in a trading range here with the support level here at the bottom of the range. You can clearly see that the price is forming a downtrend from this point, and with these points we can draw our trend line. As you can see, the trend line crosses the support level here at this point. The support level is broken here, and it confirms that the price is out of the range and the downtrend that we identified earlier is valid. As you know, this broken support level now changes its role and it becomes a resistance level. Here, the crossing point of these two lines is very significant because we have confluent resistance levels. One is this broken support level that is acting as a resistance level now, and the other is the trend line that is also acting as a resistance level in this downtrend. So this confluent point is a very strong resistance zone, and the probability that the price after touching this point would start to fall is very high. As you can see in this case, after touching this confluent point, the price declined significantly. That is true that economic data and news events are the reason of price movement in a market, but you don't need to analyze them to forecast the direction of the market, because all the economic data and news are finally reflected on the price chart. So by analyzing the price action, you can predict the future price movement with a high degree of accuracy and develop a profitable trading system. All right, that's it for now. I want to thank you for watching, and I hope this video has been helpful for you. If you have any question, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you found any value in this video, please like it. Please subscribe to my channel if you haven't already, and hit the bell so you get the notifications of my new videos. Step by step, I'll take you through it. Let's beat the market.